Hey there, investors! Welcome back to another analysis here on the channel. Today, we're going to talk about a company that might not be on your daily radar like an Apple or an Amazon, but it's become the central nervous system for many of the world's biggest companies. We're talking about ServiceNow, ticker NOW. In a world where business is getting more and more complicated, ServiceNow promises one thing: to make it simple. It automates tasks, connects different departments, and uses artificial intelligence to make everything work smarter and faster. But the big question for us as investors is, with shares trading at high prices, is there still room to grow? Is it worth paying extra for this tech giant? In this video, we're going to take a deep dive into ServiceNow. We'll figure out what it does, what its winning land and expand strategy is, why its economic moat is so strong, and of course, we'll look at the numbers, the risks, and its value. Stick with me until the end to find out if ServiceNow deserves a spot in your investment portfolio. Let's get started. What does ServiceNow do in simple terms? Before we talk about numbers, we need to understand the business. ServiceNow describes itself as a workflow automation platform. But what does that actually mean? Imagine this: an employee's computer breaks. In the old days, they'd call IT, someone would write it down on paper, and maybe in a few days, the problem would be fixed. With ServiceNow, they open a ticket on a simple portal. That ticket starts an automatic workflow, notifies the right person, tracks progress, and solves the problem efficiently. That was ServiceNow's starting point. It's service management, ITSM. They created the best solution on the market, and with that, they got into the biggest companies in the world through the front door, the IT department. But the company's genius was realizing that this same problem of broken processes wasn't just in IT. It was in HR, customer service, finance, everywhere. So they started applying their platform to other departments. Hiring a new employee, for example. With ServiceNow, the process involving HR, IT to provide the computer, and finance for payroll becomes a single, automated workflow. This is the famous land and expand strategy. They land with a client using their IT solution, and once they're in, they expand to dozens of other use cases, massively increasing the contract value with that same client. And the best part, they only focus on the biggest companies in the world, clients with huge budgets who are unlikely to go out of business. The investment thesis: ServiceNow's 4 pillars. Okay, now that we understand the business, let's move on to the investment thesis. There are 4 main pillars that support ServiceNow's success. Pillar 1, the almost unbreakable economic moat. The first, and maybe the most important, is its wide economic moat, built on very high switching costs. Once a company like Coca-Cola or Itaú puts ServiceNow into all their operations, changing providers becomes a nightmare. Think about this: direct cost, millions of dollars to put in a new system. Operational risk, the risk of shutting down the company's operations during the switch. What if the IT or HR systems stop working for a week? The losses would be huge. Training tens of thousands of employees on a new platform. Loss of data and customizations. Years of data and custom processes would have to be redone from scratch. Because of this, customers simply don't switch. The proof is in the numbers. ServiceNow has a customer retention rate of 98% to 99%. That's world-class. Once a customer, you'll likely be a customer forever. Pillar 2, the land and expand sales machine. As we saw, they don't just keep customers happy, they grow with them. More than 75% of customers use many ServiceNow products. This creates predictable and natural revenue growth. This means that even if ServiceNow didn't get any new customers, their revenue would still grow because existing customers buy more parts, add more users, and use new features. It's a powerful growth machine. Pillar 3, the tailwind of generative artificial intelligence. ServiceNow didn't fall behind in the AI race. In fact, it was one of the first to put generative AI into its platform with the Now Assist product family. This allows their customers to use AI to, for example, summarize thousands of customer tickets in seconds, quickly create code for new automated tasks, or make automatic and smart answers for employee questions. And most important for us, as investors, these AI products are sold as premium add-ons with a higher price. This boosts revenue growth and, most importantly, expands profit margins. Pillar 4, top-notch management. Finally, the leadership. ServiceNow's CEO is Bill McDermott. For those who don't know him, he was the CEO who turned SAP, a big German software company, into a global powerhouse. He's one of the most respected executives in the software world. Having a leader with that kind of experience and market vision in charge is a huge advantage. The management team has a proven track record of doing things perfectly, and that gives investors a lot of confidence. Financial analysis. Do the numbers tell the story? This is a great story, but do the numbers back it up? Let's take a look. First, revenue growth. It's amazing. They expect it to grow by about 18% each year for the next 5 years. For a company that already makes almost $10 billion a year, that's really impressive. Second, profits and margins. The company started making money based on standard accounting rules in 2019, and since then, their profit margins keep getting bigger. The free cash flow margin, which is the actual money left over, is already a fantastic 31%. This shows that the business has amazing operational leverage. The more it grows, the more money it makes. Third, the balance sheet. It's super strong. The company has over $4 billion in cash after paying off any debt. This means they have a lot more cash than debt, which gives them the freedom to invest, buy smaller companies that fit their plans, and buy back their own stock, which they've already been doing. In short, the financial numbers show how well they run the business. Strong and steady growth, with more and more profit, and a super secure financial position. Risks and valuation. What could go wrong? No analysis would be complete without talking about the risks. And for ServiceNow, the main risk is also a reflection of its success, its valuation. ServiceNow trades at high multiples, like an adjusted price-earnings multiple of over 60 times. This means the market already expects perfection. Any small slip in results, a slowdown in growth, or a failure in execution could cause a sharp correction in the stock price. This stock is for those who have the stomach for volatility. The second risk is competition. As it expands beyond IT, ServiceNow starts to bump into giants. In customer service, for example, it faces Salesforce. While ServiceNow's approach is different, focusing on integrating and automating processes behind existing platforms, competition will increase and could put pressure on prices. Finally, there's the risk of execution. Managing such rapid growth is a challenge, and although the company has focused on small acquisitions, a future larger, poorly integrated acquisition could destroy value. However, management's track record so far somewhat lessens this risk. So, is the stock expensive? Yes, but this is a classic case of paying a premium for a very high-quality asset. The investment thesis isn't that the stock is cheap today, but that the company will continue to grow at such high rates that it will grow into its valuation over the next few years. Conclusion. Is ServiceNow worth investing in? We've reached the end of our analysis, so let's sum things up. On one hand, we have a market leader with an incredible economic moat based on migration costs, a predictable growth machine with its land and expand strategy, and strong growth potential coming from artificial intelligence. All of this is led by top-notch management and with flawless finances. On the other hand, we have a stretched valuation that leaves no room for error and competitors who are eyeing their market. In my opinion, ServiceNow is one of the best examples of a high-quality growth company in the market today. The investment here is a bet on continued perfect execution and the idea that digital transformation and process automation are long-term trends that still have a long way to go. For the long-term investor who understands the risk of valuation and is willing to follow the company closely, ServiceNow represents a rare opportunity to invest in a platform that is becoming the backbone of the modern digital economy. And what about you? What do you think of ServiceNow? Do you believe in the company's growth potential, or do you think the valuation is a deal breaker? Leave your opinion in the comments below. Let's discuss. If you enjoyed this analysis, don't forget to give it a like, subscribe to the channel, and turn on notifications so you don't miss the next videos. Remember, this video is not a recommendation to buy or sell. Always do your own research. A big hug and see you next time.